Today, we're going to peel back the layers on a system we all use, but let's be honest, very few of us truly understand: banking. We're going to look at how your bank actually works, where your money really goes, and who's running the show behind the scenes. So let's start with a really simple question. You deposit your paycheck, you see the balance pop up on your phone's app, but what is that number? What is the bank actually doing with your cash the moment you hand it over? Is it just sitting in a vault? Well, it turns out the core business of your bank is surprisingly simple. Just like any other business, it's all about making a profit. At its heart, it really just boils down to this: the interest rate spread. For example, your bank might pay you, say, 1% interest on your savings account, but then they'll turn right around and lend that money out to someone else as a mortgage for 6%. That 5% gap? That's their profit right there. Okay, but wait. This raises a fascinating question, right? If the bank is lending out the cash you deposited, how is it possible that you can still go to an ATM and withdraw it? And the answer, well, it gets to the very heart of modern banking. It's the concept that powers our entire economy.
Let's dive into this core mechanic. It's a system called fractional reserve banking, and it's how your one deposit can actually be used to create much more money throughout the entire economy.
So, the way it works is the central bank sets a rule. It's called the reserve requirement that tells a bank what tiny percentage of your deposit it has to keep on hand. The rest, it gets loaned out. And that moment of lending is kind of the magic trick. It's where new purchasing power, what we think of as new money, is effectively born, fueling everything from small business loans to massive investments.
This slide really breaks it down perfectly. Just follow the money. You deposit $1,000. The bank holds on to 100 of it and then loans out the other 900. Now, that $900 gets spent and, boom, deposited into another bank, which then keeps its small reserve and loans out the rest. That cycle just keeps repeating, creating new money and expanding the total money supply way beyond your initial deposit. It's the engine that can fuel massive economic booms.
Now, as you can imagine, a system this powerful comes with some serious trade-offs. Sure, it fuels the economy, but it also creates huge vulnerabilities. I mean, think about it. If everyone tried to withdraw their money at once, a classic bank run, the bank literally wouldn't have the cash. The system can also supercharge inflation and, maybe most dangerously, encourage banks to take on way too much risk, which has been a key ingredient in pretty much every major financial crisis. So you might be wondering, has it always been like this? And the answer is a big no. For a very long time, money worked in a completely different way, under something called the gold standard. And just look at the fundamental difference here. Under the gold standard, every dollar was basically a receipt, a claim on a physical piece of gold sitting in a vault. The money supply was totally rigid. Our current system is based on fiat, which is just a fancy word for trust. Its value comes from the fact that the government says it has value. This gives us incredible flexibility, but it also carries all those risks we just talked about.
So why did it end? Well, the gold standard basically collapsed because it was just too stiff, too rigid. Imagine trying to fight a world war or pull your country out of a massive depression when you literally can't print more money because you don't have enough physical gold. Governments felt like they were in handcuffs. The final nail in the coffin came in 1971, which kicked off the modern era of banking we live in today.
All right, now that we've got the mechanics down, let's zoom out a bit, because the financial world isn't just one thing. It's a whole ecosystem with a lot of different players. This ecosystem is pretty diverse. You've got retail banks, that's your local branch, the one you probably use for your checking account and car loan. Then you have commercial banks, which are focused on businesses, managing their payroll and financing their big projects. And then you have the big guns, investment banks. They're the ones operating in the world of high finance, handling massive corporate mergers and helping companies sell stock to the public. So, with all this money being created and all these different kinds of banks, who's watching the watchers? Who makes sure the whole system doesn't just, fall apart? Who's the ultimate guardian? This is the final and maybe most important layer of the onion. The central bank is essentially a bank for all the other banks. You and I can't open an account there. Its one and only job is to oversee the entire financial system and keep the economy and our currency stable.
And they have three main jobs. First, they set what's called monetary policy. Sounds complicated, but it's really just them deciding on the interest rates that affect everything from your mortgage to your credit card. Second, they act as the lender of last resort, which means if there's a crisis, they can step in and provide emergency cash to prevent a total collapse. And third, They supervise and regulate all the other banks to make sure they're not doing anything too risky.
And yeah, you've definitely heard of these institutions. In the US, it's the Federal Reserve, or the Fed. In Europe, it's the European Central Bank. In the UK, it's the Bank of England. Nearly every major economy has one, and they all perform these same critical functions.
And that really brings it all home, doesn't it? From your simple savings deposit all the way up to global finance, every single piece is connected. Understanding how all this works isn't just some academic exercise. It's about understanding the very foundation of the modern world we live in. And to put all of this into perspective, get this. The first recorded evidence we have of banking goes back over 4,000 years to ancient Mesopotamia. Merchants back then were giving out grain loans to farmers. So the core idea is almost as old as civilization itself.
And that leaves us with one last big question. With all the new technologies out there, from digital currencies to online-only banks, the very definition of what a bank is might be about to change all over again. So, what do you think is next for this ancient yet constantly changing system?